Got that. Let's also invite Jay Bala from cashthechaos.com on the show. Jay, from extremely oversold areas, we've seen a bounce back today. But are you skeptical from these levels, or do you think the bounce can extend itself? What's the near term and then a little longer term time horizon and the trade, and how you expect markets to play out?
Hi, Rima. Good to be here. See, I'm neutral on the market at the moment, but I'm not fully convinced that the low that we saw the early part of March could be a final low. So far, the market is moving up as anticipated. I had projected last week the market to bounce up to somewhere close to 22,750 to 22,900. It's here, and the market has come here, but the move has been with a seeming struggle. So that's not a best signs for bulls. And if you look at Reliance, that's also struggling. Even in today's session, it's just flatlining or even slightly negative. Again, that's a cause for worry for the bulls. But the main risk for the equity markets comes from the global markets, particularly from the big techs. And if you recall from our conversation on the November 5th, I pointed out that the Nasdaq had potential to clock a long-term top from 2001 to 2025. So that if that is what is playing out, we'll know in the next few sessions. I'd also posted on my Twitter handle just a couple of weeks ago that whenever Nasdaq breaks below its 200-day moving average, after the 300 sessions of staying above it, it's invariably led to a steep loss. And if the subsequent losses exceed 3.5% in the next 1 to 2 weeks, which it has actually done now, it's lost about 4.5%. It invariably, over the 1 year period, it loses about 20 to 48%. That has been the precedent before. But if this is going to be the case, and can Indian markets stay unaffected? That's the thing that we are watching. I pointed this out. Is so far with the US markets decline, money is seeming to be coming into the Indian markets, but it's a struggle. It's not a trending move. So that's what we are watchful for. I believe there is one more lower low to come through. If the markets get rejected from 23,100 or even 22,900, where we are very close to, that'll be a very bad sign. And I'll look to drop my neutral stance and go to a bearish stance.
Okay, so if the market, the 23,100 level is rejected, you think we break below the earlier low, which is 21,964, perhaps?
That's right, Prashant. So the medium-term outlook was the September end top at 26,277 was either two forms of correction, or one was a long-term top. So when the Nasdaq and the semiconductor index, which this rally has been propelled by the AA-led stocks, and the semiconductor index is saying that that's also clocked a long-term top, at least from 2009, if not from earlier. So with this background in mind, there is a possibility that if the earlier low that we registered in early March, if that breaks, this could stretch to somewhere close to 18,000. Subject to revision, but it's just a objective at the moment. But as of now, as things stand today, I'm being neutral, even trying to attempt some bullishness in the mid cap and the small cap space.
By the way, talking about Nasdaq, tonight you'll have NVIDIA's Jensen Huang speaking at an event, he's pretty closely watched, maybe a little lesser so than maybe 2 months back, 3 months back, when the excitement was all around AI and the big US tech stocks. But still, I expect, I guess, a lot of enthusiasm for AI spend and scope, etc. So again, I mean, something to watch.
What's the sense? I mean, and quick check on the US market itself, which is kind of tried to sort of stabilize. So is the worst over, or is this, the proverbial dead cat bounce? What do you make of it, and what should the trading bias be?
Yeah, I'll start with NVIDIA because I had spoken about NVIDIA on the 19th of November. I had said that NVIDIA is likely to drop 50%, and it's already dropped 31%. This is eerily similar to what Cisco did in 2000 dot-com boom. In the first leg of the move, Cisco dropped 32%, and so it's almost an echo from the past. And I think the US markets have got at least one more lower low to come through, even if this were a correction and not a downtrend like I'm talking about. So that we could see another a limited upside, something like 2-3% for the NASDAQ tech index, and probably slightly higher for the S&P 500. And then we should see at least one more lower low. If that lower low seems to be a hard hit, then it confirms that this is most probably a very strong downtrend. And if it's a very slow move and that clocks a lower low in a slow fashion, that will probably indicate that we are looking at a correction rather than a strong downtrend.
Jay, any trades that you would recommend?
Yeah, I have got two picks today. One is a conditional one is a outright one. Dr. Reddy's. I've been bullish on the pharma space for since the COVID lows, and I'm slightly negative in the short term. But if pharma is coming back, Dr. Reddy might be the best candidate. Yesterday's strong move looks like at least tradable counter trend bounce. So a stop loss at about 1090 and remain bullish on it. And the next one is from the auto space. Escorts Kubota. It's developing a inverse head and shoulders pattern. It needs to cross 3067. So the third trade doesn't trigger before that. Don't preempt the market. Wait for the stock to cross 3067. Once that crosses on a closing basis, that will confirm the inverse head and shoulders pattern is in play, and a stop loss of 28.25.
The Nifty IT index today has moved in sync with the frontline indices, 1.4% higher on that index. What is it telling you after the recent correction?
Yeah, not a good sign, Rima. See, I think the Nifty IT index is likely to correct below the June 2024 low of about 26,000 and change. Because if you draw a trend line from the pre-dot-com boom levels of 1996, the trend line passes through the COVID lows and the June 4th low. That has been broken and taken out, and trading below 37,000 is not a positive sign. I think there will be a feeble bounce for the Nifty IT stocks, and there will be a lower low coming in the short term, and then further higher highs, and then resume the downtrend. So a little bit complex, and so basically I'm expecting further lower lows to come through in the very short term of 1 to 3 days time frame. I'm anticipating some bounce, but then selling to resume lower.
You know, I have to say, it's quite incredible. There's no volume on the downside at all. No volume.